All right, everybody. Welcome to Finance Friday. This is Jerry Fetta, owner, founder, CEO of Wealth Dynamics, and I am here with none other than Neno Aquino, my co-host. What's up, Nano?
Hey, what's going on, Jerry?
Awesome. So we've got a good course tonight. So we're going to be talking tonight about professionally managed Forex, foreign currency trading. Okay. And there's going to be a lot we'll dive into. But before we get started, Nano and I like to cover some ground rules every week. Same things every time, just some basics. Nano, do you want to hit those real quick?
Of course. So a couple of the things, right, as you guys are starting, there's going to be a few different groups of people that are going to be joining the party tonight, right? It's going to be the clients, people that have already been following our program are very much aware, and they're here to learn to continue their ongoing development on finances. That's one of the first categories. The second, it is the brand new people that have not seen us before. And the third is going to be the people that are kind of trying to find out more about who he is. Maybe, you guys have seen us a few times and you're trying to understand, okay, more about what is it that you guys, we're about. So those three groups. Now we're going to be addressing all three of you guys, right? If you guys are clients, they have been coming here on an ongoing basis, you already know the rules, you already know you already know how things are going to work. Now, regardless of wherever you are, whatever category you're in, first thing to have in mind, have a purpose for attending the webinar. Why are you here? Now, it is a Friday night, right? You could be doing anything but attending a financial webinar if you're on Eastern time at 10 p.m. Right? So what is the purpose? Like, what am I trying to accomplish with this? Now, having this in mind, it makes it easier because it puts you at a higher level of responsibility for what you're going to be getting out of the webinar in itself. Because Jerry and I can actually give a lot of information here, but if I don't have an intention of purpose for actually applying the information, it is going to be useless, right? So regardless of whatever category you're in, have that in mind. Also, realize that this can be a knowable subject, right? Finances, it really is going to come down to, Jerry mentioned this on a weekly basis, vocabulary and math. If I know how to add, subtract, and multiply, and even if I don't, let me use a calculator, right? We got that easy, right? So that's the easy part. Now, then it's going to come down to what? Vocabulary, like understanding what some of the terminology means when it comes to dealing with things, right? Taxes or investing or speculation, standard deviation, all these different terms that can become like a little confusing. And whenever, I don't know about you, but like whenever I come across words that I don't fully understand, it is very easy for me to be able to withdraw from a subject because I don't have like a full knowledge on that subject itself, right? So especially if I don't know what it means or I don't clear it up, those words, it makes it difficult. So understand that it can be noble. And then if we're actually speaking in terms that you don't fully understand, let us know. We're going to try to make it as simple as possible. Drop it off your questions here. We're going to be answering them towards the end, which is going to be my next point. And this is going to be an engaging type of a webinar, right? Where we're going to, this is not just a dictating type of a style. We want you to be able to have your questions from the application, the things that you're dealing on a regular basis. Why? Because it needs to be applied, right? Knowledge just for the sake of knowledge without the application, like really, what good is that really going to do to you? And be a producer, not a consumer. Meaning, if this is for you, fantastic. Right, we have a few people, like all of the people that I've encountered so far, they're all producers, meaning like they're going to actually trying to get a product, get something out of the webinar. And last thing here is share if this helps you. On that note, I do want to mention to you that we're going to be talking about the book here, which is The Blueprint to Financial Freedom. We have somebody here on the webinar as well. His name is Griffin. He's one of our teammates. He is going to be reaching out to you throughout the webinar just to introduce himself and then like make himself available for like, hey, if you have an interest on learning more about what we do, how about you get on a book? How about you get on a call with Griffin or myself to be helping you? Let's jump on a conversation and see how we can help you. So that will be some of the ground rules for starting the webinar tonight.
Absolutely. And Nano, you said something that I want to go back to actually. When people don't understand finances, they tend to withdraw from it, right? It's like, they don't want to learn about it anymore. They quit on money. They come up with things like, oh, money's not everything, or, we need to come up with other status symbols or whatever it is. But here's the problem with that is I can withdraw from money. Money is never going to withdraw from me. it's going to follow me around for the rest of my life. Will I live in denial because I don't have understanding of it? Right. So we talk about the book. If you're not a client, you haven't read the book yet, our pure intention 100% tonight is for you to buy the book. You can get it for $2.99 for the ebook. It's $9.99 for the paperback. That will come with a free coaching call with Neno or with Griffin. So if you're watching this and you're not yet a client, Griffin's going to send you a message. He'll reach out to you. So make sure you check your chat, right? So if you do have the book, we're going to be talking tonight about professionally managed foreign currency trading. So you can actually look at this on page 23. So it talks a little bit about that in the book itself, right? And so we'll kind of go over, how that works and how wealth is built with that. Now, I want to tell you guys, as somebody that's been in the financial industry for 10 years, 11 years now, this is an area that there is a lot of confusion on, right? I remember, back in 2016-ish, 2017, Forex was very popular, right? You would see it all over Instagram. You would see, multi-level marketing companies doing Forex, just really bad combination, if you ask me. And then you'd see, people sending you DMs on Instagram, hey, put money in my foreign currency fund. And it was this, giant, kind of like Bitcoin is today, right? So this was something that got a bad rap as something new. And so I want to give a lot of clarity on it because this is one of the things that I personally use to build wealth. This is actually for banks today, one of their number one profit centers in 2020. This was actually the number one profit center in Q4 for JP Morgan, right? So you're talking about a $1 trillion market daily. And this is the number one thing banks are doing, even more so than they're doing lending and interests and all these different things that you might think of with the bank, right? So it's important that we understand this. Now, I want to dive into a couple things, and I'm going to have Nano kind of go over with us real quick on just what Forex is. So Nano, could you define this for us?
Of course. Now I'm just going to go ahead and read right here, right what you wrote. So Forex basically stands for a foreign exchange. Now, whenever you see those two words, right, or that acronym, like that's what it stands for. Foreign exchange, it is the type of trading where currencies are going to be traded one for the other, taking advantage of deviations in currency price. Now, deviation is going to be the price swing, right, that the currency is going to be having. Here's another piece of a word, right? Like if I don't understand, okay, what does that mean? Like deviation. Now, when I hear that word, right, so you learn how to actually be, whenever that comes up, okay, good. So that's what it means, right? The deviation of a currency price with the intent of trading at a net profit. So whenever I take a look at that, good. So I do understand that now I'm going to have different currencies that are going to be trading at different prices. If I also understand that a currency has something called a deviation, it is, okay, this is normal to be expected. Now, this is Forex, often highly speculative and requires a great deal of skill. This is one of the things that Jerry is going to be addressing here, Jerry and myself, throughout the call. Although an individual can actually make quite a bit of money with this, they can also lose, right? Which is one of the things that we're going to be diving in today.
Totally. That's a great definition. And again, guys, if you have questions on this, drop them in the chat. Nano and I will go live with you and answer your questions. If you wish to remain anonymous, just let us know. We'll keep it between us. We'll just answer your question the old school method. Justin Goff on Facebook. What's up, Justin? Good to see you back. He says we hate on what we don't understand. I would say it's a very true statement. So this is speculation, right? So I'm going to be like 100% upfront with you. Foreign currency trading is a form of speculation, right? Now, what do we tell you about speculation? It's not something most people should do, right? It's a form of kind of guessing and predicting what's going to happen and trying to be ahead of the curve based on, many different factors. We've done entire courses on just what is speculation, right? So here is what speculation is. Here's a definition of it, right? So this says speculation is the act of conducting a financial transaction that has substantial risk of losing value, but also holds the expectation of a significant gain or other major value, right? So we have potential for dramatic gain, but we have equal potential for dramatic loss, right? And so this is what speculation is. Now, we would say, okay, well, if you're going to speculate, my number one rule with this would be you better be good at it, right? Like if I'm going to be gambling and guessing, like I have a significant gain and I want that gain more times than I lose. And as long as I can gain more times than I can lose, I can have a net profit, right? Now, ideally, I don't lose at all. But, if you're trading day in and day out, and you're entering and exiting several dozen trades, more than 51% of your trades have to be hits. They have to be, profitable. Kind of like, if you look at, baseball, someone's batting average, you don't have to be perfect. You just have to hit more than you miss. And when you do hit, you need to be able to score and you need to be able to get points with it, right? So this is kind of what we're looking at with this, right? Now, here's some of the myths with Forex. Nano, do you want to just jump into some of these?
Of course. Now, I actually want to clear up that word myth, right? And that myth, it is going, the definition, a widely held but false belief or idea, right? So here we have, right, this, just from that in itself, it is like an idea that can be, okay, now lots of people may be thinking that it is true, which in fact, maybe not, right? So this is a myth, right? It is too risky. Going back to the point that Justin just mentioned, right? Justin Goff, that what we don't understand, what we tend to hate. Sometimes we can even mock, right? Make fun of something that we don't understand. Also, Forex is a scam. Now, here's the funny thing. Going back to mocking or belittling something that we don't understand, calling it a scam. Oh, this is a scam or that is a scam. When if we just do a little bit of learning, a little bit of history, and we see what the Federal Reserve Bank has been doing and who they have been working with, and the majority of Americans, where they put their money on, 401ks, right, banks, and so on and so forth. And we actually try to once we actually realize what the scam actually is, because let me go ahead and look it up, the definition of the word is scam as well here for you. It is going to be a dishonest scheme, a fraud. Now, imagine me putting money in a bank, and now I'm no longer the legal owner of that money. Right? Do I know that? Like, do the majority of people actually know what is actually happening? Same thing with 401k, right? Whenever I'm putting money there, now it is marketed in such a way, right, that I don't understand that I never actually take money out in the future. It is actually going to, one, the currency is going to be lower devalue because what the Federal Reserve Bank has been doing, printing more money. Point being is like, what is actually the scam, right? Which, like, one, if I don't know that I'm in one, that's actually a problem, right? So now if I'm mocking something that I don't fully understand because I want to make myself right, because now if I don't understand what I'm dealing with, I got to be able to protect my viewpoint, when rather it would be the financially wise or wise period just for me to look at, what is actually, again, vocabulary and numbers. Now, another myth.
But real quick on this point of the scam, I want to hit this because it's a viewpoint that I had and it shifted everything when I realized this. Everything is a scam. Anything attached to the US dollar is a scam, which means stocks priced in US dollars, that's a scam, right? Like anything that has US dollars. So Forex, foreign currency, is literally a market of all the currencies being traded. Yeah, it's a scam. All dollars, all currencies are a scam because they're backed by nothing. So if the playing field is level and everything financial technically is a scam because it's based on US dollars, which are, at the root of all of that, it's a scam, then we're all in a scam together. So don't you want to be winning at the scam? Right? We're in the scam anyways. You can't change this fact. So you're either going to win in the scam or lose in the scam. Which side do you want to be on? And that's how you've got to think about this, not just with Forex, with everything. Like Nano said, do I put money in the bank? Okay, well, it's a scam. Does that make me win the scam or lose the scam? Right? Do I put money in my 401k? Well, it's a scam. Does it make me win the scam or lose the scam?
Yeah, which kind of goes back to what I mentioned a little earlier, right? Like, this is a game that we are forced to play. Whether I'm like, no, I don't want to do this. Oh, I don't understand, or I withdraw from the subject. What's the alternative, right? Because it's like, again, going back to the purpose, I got to have in mind, what am I trying to accomplish with this, right? Here's the name of the game: financial freedom, right? At least from us, that is the goal that we have for our clients. Doesn't mean that everybody's going to actually attain that, right? It's going to take a lot of persistence, doing the right things, avoiding some things as well. Not just, if I'm doing the right things, but I'm not avoiding some of the wrong things, it can cause my delay on this. Now, Jerry's writing it down here, right? What is the actual mathematical equation on this? Which means, right, that it does not leave room for opinions or mistakes, especially if I'm trying to accomplish what? Freedom. Now, that means it goes back to all of this goes back to purpose. I got to have very clear for myself, what am I trying to accomplish with all of this? because I have to be very intentional to learn, to clear up my words, to understand, to do the same things over and over, which is quite boring. This is one of the things that I learned as a client. For those that don't know, right? I was a client first that just say, hey man, this is the boring plan. And I was like, oh, okay. It's like there's gonna be a lot of repetition, and it's gonna be, this is not the get easy, get rich quick, right? It's gonna be taking a long time, but the consistent, but you eventually get there. That means if I just do the bare minimum, I'm in, right? So point being, like the mathematical equation. Did you want to say anything to that, Jerry? Do you add in the PI over?
Yeah, the bottom line is, does it get you here? Right? Like we go back to the scam thing. Like if it's all a scam, well, which one gets you here? Which one gets you closer to being financially independent, breaking out of the rat race? Right? So, when you look at this, it's like, okay, well, I have to be able to look at, well, what is PI greater than set, passive income greater than savings, expenses, taxes? What's my number? Am I on track to get on? Am I on track to get there? And the ironic, funny thing is that this, compared to what most people do, is get rich quick, right? Most people are never going to get rich. They're never going to retire. If they do, they're going to run out of money within 10 years of starting to withdraw from their retirement plan. So when you start talking about, okay, well, in 15, 20 years, if I do this every single day, I could have passive income greater than savings, expenses, and taxes relative to what most people had. That is get rich quick, because everyone else has the never plan.
Yeah, it's going to be always in comparison, right? Comparison to what? To never getting there? In comparison to, let's say I don't even accomplish this final number, right? But I'm able now, I have a sacred account in place, and I'm now financing my own stuff, right? Just from that perspective in itself, that let's say I'm bypassing the banks. I'm on my own bank at that point, right? Okay, good. So we got to have that in mind. Also, another myth here. I have a bot that does this. Okay, right? So that's something else. And I'm going to do Forex trading for myself. Now, what was the quote from the guy, Jerry, that you mentioned, that in order for the person to be winning in the Forex market, it requires more skill than an Olympic athlete? I think it was.
Oh, I forget who did that. Yeah.
Was it Ray Dalio?
I think it was Dalio. Yeah.
Yeah. Right. So basically, like this guy, right, who is a master, at this, he says, like, look, for a person to actually be winning this, he requires more skill and discipline than an individual who is an Olympic athlete. Imagine this. Like, I'm going to do this Forex trading myself. It is the equivalent of say, hey, I'm going to go to the Olympics now. Well, which you have better chance to make it to the Olympics than winning at something like this.
And even if you make it to the Olympics, you still might lose.
Correct. Right? Because you still got to win in the Olympics. Right? And the other thing is, I have a buddy who's going to do this for me. Those would be some of the myths along the way here.
This one here, when it comes to investing, this is one of the most dangerous phrases I've ever heard. This is how people lose a crap ton of money. Their buddy that has the Bitcoin fund or the Forex fund or the real estate flipping fund is going to do. I've seen people literally go from, hundreds of thousands to zero because of their buddy. Right. So I want to jump into though, but we won't dwell on the buddy. We'll leave the buddy alone. He's got enough problems. We'll jump into the facts here. Okay. So here's some of the facts. All speculation is risky. So the idea that this is too risky, the first question I always ask is risky in comparison to what? Right? You could say it's risky to not be investing. It's risky to be paycheck to paycheck. It's risky, to be financially illiterate. Right. So we're all comparing risk. Well, which one is riskier? Right. So we are speculating here. All speculation is risky. And so I would say, okay, well, if you're in the stock market, you're also speculating. If you own crypto, you're speculating. If you're buying a single family home, riding on the fact that it's going to go up in price, you're speculating. All of those contain the same risk, right? The thing that enters in is what's my understanding level and how much control do I have, right? So that's the first point. The second one is the idea that it's a scam. And I know I kind of already covered this, but let me cover this part. Forex is the largest market in the world. Okay, we'll go into this in a bit, but guys, I'm going to spill the beans ahead of time. On an annual market cap, it's a $20 quadrillion market. I'm going to say that again, $20 quadrillion. It's the largest market in the world. It's bigger than the stock market. It's bigger than the bond market. It's bigger than the real estate market. So if something like Forex is a scam, what does that make everything else? What does that make the stock market, which is smaller than the Forex market? What does that make the real estate market? What does that make the bond market? What does that make the crypto market? Right? So you have to look at, okay, well, it's the biggest, it's the most established. It's actually been around longer than all the other markets as well. When done correctly, and this is the part that's a two-edged sword, Forex definitely can be get rich quick. There's a reason why banks do it. They're trying to get rich quick, right? JP Morgan is the #1 publicly owned bank that does Forex trading because they're trying to get rich quick and they're very successful at it. Okay. Now here's the thing, and I want to point this out. This is not a supplement for somebody that doesn't earn enough income. I'm going to get the cat out of the bag on this one. This is not for someone that their income's capped out and they're like, I can't earn anymore. So I'm going to load all my money into Forex so that I don't have to I don't have to work and produce, right? No. This is for someone that's producing a lot. They're saving 40% of their income. They've done a lot of investing already with real estate deals and private lending. And this is now the cherry on top, right? And they're still going to keep doing all the prior successful actions. Okay. The other one here, number 4, a bot, right? So the idea that we can have a bot or an AI system doing all this, a bot's not going to beat the largest banks in the world, right? Like when you see who's in the Forex market, like the idea that you're going to have a little robot on your smartphone that's somehow on a binary basis of zeros and ones is going to outsmart the most intelligent, like Neno said, the quality and caliber of the Olympic athlete. But imagine the ones that JP Morgan Chase picks. Those are the guys running their Forex. So the cute little bot that we have isn't going to be able to compete with those guys. Forex is also a zero-sum market, which means for me to win, someone else has to lose. For me to lose, someone else has to win, right? So we're now saying that JP Morgan makes their money by taking yours, and you're going to do it with a bot, right? Like that's like David and Goliath, but David is cross-eyed and mentally handicapped and can't throw straight. Like he's not going to win. Okay. So number 5, Nano's cracking up at that one. That may not have been politically correct, but that's okay. I think we can all get the humor there. Number 5, doing it yourself. Guys, the guy that I work with that does trading, I watched him do it himself. Okay. He's one of the best Forex traders I know now. And I'll tell you, it literally took him from high school. We were in high school together. He opened his first Scottrade account when we were in 9th grade under his dad's name. And he started practicing trading, and he went broke probably half a dozen times after high school, working crappy construction jobs to get money to get back into the trading. And he just got good 5 years ago. Right. So we're talking literally 10 years of learning, and he just got good 5 years ago. Right. So that costs a lot of loss. Okay. And it's also a full-time job. It's not passive. Okay. He wakes up and he trades the markets. He's got to be on the computer making trades all day long, every day. He can't stop, because if he stops, he doesn't make money. Right. So the idea that I'm going to do it myself, like really what I'm trying to say there is, well, I'm going to try and save costs, or I'm going to try and keep the whole pie for myself. Well, 50% of a giant pie is better than 100% of nothing. Right. And that's the mindset you got to have. Nano, you want to say something on that?
No. And this is not a part-time type of a thing, right? Like even if I'm going to do this, a couple of hours a day just to emphasize on what you're saying there, because I met the guy, right? Like the guy's up at 4 a.m. like to doing this kind of stuff. I'm like, wow, like I wake up early, but that's some dedication right there.
Yeah. And the other one is the buddy, right? I have a buddy that's going to do this. Guys, banks don't hire their buddy, right? They hire the best of the best. And so when we're talking about this, we teach our story. Our talk is about building wealth the way banks do. How do we do what they do? Because they've been wealthy for hundreds and thousands of years. They use the same systems over and over and over. And those systems are available to us too. And so I'm telling you, their system is not hiring a buddy, right? Their system is to find a professional to do the job. So these are all the facts about Forex. The next thing I want to move on to, and I know we have some questions coming up in the chat here. The next thing that I want to move on to, and by the way, guys, if you're in the chat, Griffin is reaching out to you. So be sure to check your messages. Griffin's reaching out. If you've not gotten a copy of our book, Blueprint to Financial Freedom, this is going to cover everything you need to know, including Forex, right? So check your chat. Don't be that weird person that pretends you didn't see Griffin's message. So he's a good guy. Reach out to him, message him back, and set up a call with them. So guys, here's the Forex market, right? So Forex is the largest and most liquid market in the world. This was in 2020. The Forex market was valued at $2.4 quadrillion. right? Like we have a million, and then we have a billion, and then we have a trillion, and then we have a quadrillion, right? How do we even draw this out, Nano? How many zeros is that? We have, let's draw a quadrillion really quick.
Wow.
That's 1,000 million, billion, trillion. Is this quadrillion?
It is 16 zeros.
16
It's
zeros.
one
Okay.
and, sorry, 1 and 15 zeros after it.
Okay. 3, 6, 9, 12. So 3 more. And then we put 2,000 in front of this, right? 2,400. All right. Don't quote me on my math, but I think this is 2.4 quadrillion. Okay. That's that's how big the Forex market is. Okay. So I want you to think about this like, okay, this is a giant market, right? And so you have to think about it. This is like you're swimming in the biggest sea there is. And when I think about that, the first thing I think about is, okay, the waves are huge. The currents are strong. The tides pull heavy. There's probably sharks. There's probably, pirates. There's all sorts of stuff. It's a giant ocean, right? And this doesn't mean don't get into it. It means if you're gonna, you better be on the right team, or you better be bigger than everything else out there, right? One of those two things. I either have to be the biggest fish, or I've got to have a good enough, team where I can fend off everyone else, right? I'm not going to go out there in my little dinghy and hope that things work out. Nano, do you have anything you want to add on that?
No. I was just messaging, responding to some of the messages here on the chat.
Okay, very cool. Good. So guys, that's how big the market is. So I want you to kind of think about that as we talk, right? Now, the next thing is the history of Forex. This is actually one of the oldest markets in existence, right? So this is talking about, the age of the Forex market. So in its most basic sense, that of people converting one currency to another for financial advantage. Forex has been around since the nations began minting currencies, right? And you could even go back further, right? If you go all the way back to ancient Babylon when they had trading posts, right? If one group used corn and the other group used stones and they traded those currencies back and forth, that was Forex. This has been happening for thousands and thousands of years. Ever since there's been currency and barter, Forex has been a thing, right? So here's an example. If a Greek coin held more gold than an Egyptian coin due to size or content, then a merchant could trade in a way that left him with more Greek coins. Like you're trying to get an advantage to where you have more buying power, more value with one currency over another, right? A simple example of this could be, let's say that I buy gold in the United States today, right? And I look over in Singapore and I see that gold is selling at a higher price in Singapore. I might buy it in the US and sell it in Singapore on a trading platform and get an instant profit, right? Now, the thing is it's not just staying there. It's not like they froze it in time, so it's easy for me to get. It's moving all the time. And so the trick here is how do I, find the patterns? How do I enter at the right time? How do I exit at the right time and do that consistently, right? So this was the extent of the Forex market up until the modern era. Parties with the ability to transact in one of two currencies would use the lower valued currency for paying out and demand the higher valued currency for payments received. Let's just look at that really quick. So if you had two different types of currencies, this is what the central bank does. They pay out US dollars, right? They take in gold. They're the number one buyer of gold, the number one storer of gold, but they pay out US dollars. This is exactly what it's talking about here, right? Let's go back over that, right? So if you transact in one of two currencies, you would use the lower valued currency for paying out. It makes sense. You would use the lesser quality ingredients. Now, this is like when you worked at the Brazilian steakhouse. Tell everyone should we tell them the secret? I don't know if we should tell them the secret. Should we?
Yeah, sure. Why not? So one of the secrets, quote unquote secret, whenever, you were at a steakhouse, and pay attention to this next time you go, they're actually going to be serving the lower quality content first. So that by that way, when the good quality stuff does come, you're already full, right? So they pass it on like sausage, chicken, pork, all the stuff that's like still good, right? But has a more of a, I could get that anywhere, right? Like the high quality content that is, grilled to its finesse, right? It's gonna come later. So like if you are experienced, like I was, right? You just like, no, like I want that. So anyway, so it's like the comparison to the analogy here that Jerry's mentioning.
So you're paying out the cheap stuff. You're getting rid of the low quality stuff. And then you're demanding income of higher valued currency for payments received. Right? That's the basic, right? So this is saying, when they do that, they're profiting from arbitrage, the spread, the difference between, okay, we're demanding, high value currency, we're paying out low value currency, and we're making the spread on the difference between the two. So that's basically like, when you look at it, you can look at modern day Forex and they'll tell you, hey, it was in the 1900s. That's when banks started using it, right? And that is true. But if you go all the way back, well, people have been doing this forever, right? This is something that's been happening for thousands of years. So sure, the US financial system might have turned it into a profit center in the last 100 years. But you look at, other civilizations that came before us, and this is one of the most established and oldest markets and practices that are known to mankind. Okay, so let's take a look at the players, right? If you're going to play the game, you got to know who's on the field with you. So the number one traders in the Forex market, the first one is central banks, right? They're the issuer of currency for countries. So it makes sense that they trade their currencies against each other. They issue currencies, they demand certain currencies, they make payments in other currencies. And so this makes this the largest fish in the Forex world. Right? Like if you understood what Nano said at the beginning of the call today about the central bank, the Federal Reserve Bank, if you ever wanted to get up and close with them, get in the Forex market, right? Like they run that thing. That is their deal. Okay. So that's the number one fish. Go ahead, Nano.
Yeah, but also you got to know when to get there, right? One of the analogies that you mentioned, right, Jerry, is like going to the ocean with a small boat and not knowing how to maneuver there, right? Meaning, if I try to get inside the Forex and I'm broke, or I'm not making enough income, or that's all I have, then it's a problem. Because if I lose it, which could happen, right? I enter playing the game knowing what can happen, right? And but like if I don't have enough to keep myself afloat, that's all I have, then it's a problem, right? So I got to have that in mind to understand how to play the game, because we are forced to play the game, meaning the currency game. Right? You and I are actually forced to do that, whether we want to acknowledge it or not, right? I'm either going to be in denial, right? Or I'm going to say, like, no, I don't want to do this. I'm going to pretend it doesn't affect me. Oh, it's not that bad, right? No, it's okay, right? And until it's not. Or I'm going to say, realize, you know what? I actually need to break free, because this is, if I understand this, right? If there's a system that it is printing money on an ongoing basis, causing this to go down in value, that means the time that I'm trading for this is actually a way that it is enslaving me to this, because I need to work more and more to have more of these in order to maintain my lifestyle. So I really need to have that up to in my front. Like I got to understand this, because that's the game that we are forced to play. Which also means, okay, this is happening, which is going to be like a confront. Like, am I willing to confront that this is something going on? One of the things that I was talking with Jerry earlier this week, right? There was an individual, one of our clients, right, or leads, so if you want to call it, the guy had like over $1 million sitting in cash, and then I mentioned it to him. I brought it up. Is it real to you that it is costing you? And then I give the number, right? Because of inflation. He's like
180,000 right now a year.
Exactly. Right. And he's like, oh, possibly. I'm like, what do you mean? Like, this is either happening or not happening, right? So it's a level of confront that the individual's like, I need to have that in place, because this is actually happening, whether I want to acknowledge it or not. Now, the sooner that I do, right? Okay, good. Now I can actually do something about it, because if I pretend like the house is on fire and I think like, hey, let me turn on the TV, like that's a problem. Like I need to confront what's actually going on, so I can actually break free. Which again, like that's anyways, that's what I wanted to add to what you're saying, Jerry.
Yeah, exactly. And guys, again, like if you've not read the book, this is on page 24, Blueprint to Financial Freedom, right? And so this talks about, when you're doing Forex trading, it's something that needs to be done professionally. I want you to look at each of these groups. Central banks, like that's a very, like, even though we don't like them, they're a group of professionals. They know what they're doing. They know they've known what they've been doing for hundreds of years. right? Chain banks. What is a chain bank? A chain bank are these giant banks you see across the nation. You know, the JP Morgans, the Wells Fargos, right? The UBSs. Like these are the Bank of Americas. You see them on every corner in every town, right? This is not your small regional bank. Hedge funds, right? Neno mentioned Ray Dalio, funds that are giant. They do this kind of stuff, right? And then you have market making traders. These are people like my friend, right? Where they've on an individual level decided, hey, I'm going to learn this, and they turn, you know, their own fund and they start doing this themselves. And that's a very small minority, but the majority of this market is controlled by these top three, right? So when I look at this and I'm looking at, you know, blueprint to financial freedom, right? And I'm looking, okay, well, where do I integrate Forex? It's at the point where I'm ready to compete with these guys. Okay, because that's who I'm going in the water with, and I need to make sure I'm prepared. So in this, I want to just read a little bit from the book even. So again, if you've not got a copy of this, reach out to Griffin in the chat. Okay, definitely get the book from him. So if you research foreign currency trading done professionally, you'll see it is the primary way that banks use to make money, and it has existed since ancient Babylon. It is popularized in banking by JP Morgan himself, who did it as a hobby with his own assets, but also integrated it as a profit center for his banks. This is not a promissory statement of any sort. So here's the difference with Forex. When we do private lending with real estate, we have a home, right? And that home is secured by a mortgage note of some shape or form, right? We loan money out and it's backed by real estate essentially. So when you're doing Forex, there's not something backing it, right? Like you're taking US dollars and you're putting it into, you know, a fund or a platform, and you're trading it back and forth with other currencies. Okay. And this is where, you know, it's great. The returns are awesome. It's an awesome strategy, all that stuff, but also there's some risk here, right? Because if the bottom falls out, if a bad trade happens, if I lose, because these guys are trying to take my money, that's the point of why they're there. They want to take the money and have the profit. It's a zero-sum game. If I lose, there's not, hey, I'm going to foreclose. There's not, oh, I'm going to, you know, take the property. There's nothing to take, right? It's just gone. It's like, you know, those guys that last month lost all their money in crypto. It's just gone. It's never coming back. You're at the place you're at now, right? So on that note, question from Justin Goff on Facebook. Justin says, with the current instability of global currencies, is now a dangerous time to be in Forex, or is it the perfect time? So that's one part of the question. So I want to answer that really quick. So trading happens when this happens, right? We want to be able to swing the ups and downs and make money on them, right? So with volatility, when things are unstable, that's actually a better time for a trader. They thrive on volatility because, you know, the time you can't trade is this. There's no change. When there's no change, there's no trade to happen, right? So there has to be the dichotomy of this side and this side, and I'm going to trade this for this, and I'm going to make the profit in the middle, right? If that doesn't exist, then I can't trade. So more volatility is actually better. Now, I asked my buddy that does the funds, and I was like, one time I was like, hey, what happens if there's a currency reset? What happens if the US dollar goes away? What happens if they go to a global currency, right? And his answer made total sense. At some point, if that were to happen, and it always has happened, we'll switch to something new, and everyone will have their own new thing now. All their countries will have their own new currency, and people will trade those too. Something will always be traded for another thing, right? Doesn't matter what it is. It used to be beans and corn, right? And then it was gold and silver, and now it's, you know, it's dollars and yen and euro. So it's always been there. It's always followed that cycle. Every currency ever has failed, and Forex has always emerged as a thing with whatever the new currency was, right? So that's the first part of Justin's question. He also says, and can you explain to everyone why Forex through Wealth Dynamics is better than Joe Schmo with an IG account? I don't think there's much explaining to do on that. I mean, it's the difference between, you know, going to buy, you know, a Rolls Royce from Rolls Royce, or going to, you know, a chop shop, and some guy's like, hey, I can get one for you really cheap, but it's all shady and it's not actually the real thing, right? So if you're looking at, you know, how do I trade Forex? Don't do it in your Instagram DMs, right? Like that's the only place you do like Instagram DMs. You only go there if you're looking for problems, in my opinion, right? Like if someone slides into your DMs and like, hey, I'm going to help you with a Forex fund, that's not probably the person you want to invest with, right? You're not going to find it on the App Store. You're not going to download some bot that magically makes you rich. Like all these things, and you probably see this, Nano, all like somebody that would do that, they're looking for the shortcut, right? They're looking for the way to not have to do the work.
100%, right? And it's almost like a person not having knowledge how the sequence of things that need to be done, right? And they can also come up with, oh, there's multiple ways that a person can actually build wealth and so on and so forth. I'm like, okay, sure, right? But it's like, what about if there's a sequence? What about if you don't have to actually go through some of the avoid, like, again, as I mentioned earlier, right? It's not just making the right choices, but avoiding the traps. And some of the traps is like trying to skip some of the things, like me trying to get into something sooner than what I'm ready for. Meaning, if I try to get on something like this and I'm not ready for it, meaning if I'm not solvent, if I haven't done deals, like if that's all I have, then it's a problem. Like that, this, instead of helping me, it is going to be detrimental for me to actually get out of prison, financial prison.
And it can actually keep you there. So when I did bodybuilding, just to give you guys the example, when you're a bodybuilder, like the elephant in the room is, do you decide to do steroids or do you stay natural? Right? That's like, the big thing is like, do you do that or do you stay natural? And so, like there are people that they've got great genetics. They can go be a bodybuilder. And if they take steroids, they're going to be a freak and they're probably going to turn into a world champion. But most of those guys, they trained for 10 or 15 or 20 years first. They maxed out what they could do themselves. And they're like, hey, I'm going to go take testosterone and growth hormone and go win a Mr. Olympia title. Right? Now, there was always that one guy in the gym that didn't max out his potential. And he was, clearly taking steroids, and he just wasn't as good as the other guys. Like he never actually had the foundation because he wasn't patient. He didn't put the work in, right? That guy's never going to win a Mr. Olympia. Now, what he did get was all the side effects, right? He didn't get any of the benefits. He got all the side effects. And so I relate that to this. Is like what Nano's saying. If somebody hasn't put in the work and they haven't maxed out their own potential on phase 0 and phase 1 and phase 2 and phase 3, and they're like, hey, I want to jump into Forex, it's the equivalent of that. It's like, okay, well, build a foundation first, right? This isn't something where you just jump in and magically you're going to be wealthy. Like you could lose everything. And if you've not done phase 0, 1, 2, 3 to completion, where you know how to duplicate those items and follow those steps in order again, if you did lose everything in Forex, you wouldn't know how to go back and rebuild it. Yeah, right? That's one of the key reasons we tell you wait and do it at the right time.
Yeah, and I want to add to what you're saying, Jerry, like, because some of the people may not know, right, what do you mean by phase 0, 1, 2, and 3. What Jerry's referring to is there's a sequence, right, of steps for a person to get to the passive income greater than saving expenses and taxes. Now, the sequence would be, right, I got to understand how money actually works. I got to earn more income. I got to get rid of all my consumer debt. I need to save up so I actually have reserves. I need to reduce my living costs, reduce my taxes. I save 40% or more of my gross income, then I invest for passive income. So I have to do all of this in sequence, right? If I don't understand how things work, right? Imagine us talking about currency trading, standard deviation, all this stuff. I'm like, yeah, that doesn't make sense, but I can make money doing that, right? And then I try to skip all this, right? It's a problem because I'm trying to go from, even if I have some of those accomplishments, right? Let's say that I do have some knowledge. Okay, good. And then I'm earning income. I don't have any debt. I have reduced my living costs. But now let's say I have a couple of deals under my bag. I'm like, no, I actually want to put money into Forex now, right? Instead of being sophisticated, I mean, I have the knowledge under the area to understand this, right? Okay, good. And I also understand first I need to have more of an active income side that I'm consistently saving 40% of my income in order to continue doing this cycle over and over again. Because if on the Forex side, there is a chance, right, of losing. If that does happen, this is not going to slide me back on the progress in order for me to get to financial freedom.
So I'm drawing this pie chart out just to give you guys a visual, right? So I do lots of investing. I have a multi-million-dollar net worth myself, nowhere near where I want to be at, but here's where I'm at, guys. Like if I were to do a pie chart, the majority of what I invest in and buy is actually gold and private lending deals. Like if I were to put it in a pie chart, this is probably what it would look like. Most of it's gold and private lending deals. This next chunk is life insurance, right? This small little sliver is Forex. Okay. Now my life insurance, we already know it's about 3 to 5%, right? I'm going to borrow against, I'm going to do gold and real estate. I know that my gold is 8 to 10%. My private lending deals, these are 8 to 12%. Okay. Now, this is not an offer to invest. This is not a promissory statement. None of that. So don't take it as any of those things. My Forex, I make about 48% a year on. Why such a small sliver? Right? The reason being is this is also the highest risk. Okay. My gold is not going anywhere. My life insurance is not going anywhere. My private lending deals are not going anywhere. My Forex could go away tomorrow. Right? So when you look at the big scope of things, and it's like, okay, I have a multi-million-dollar net worth and this much of it's in Forex. Right? And it's tempting to say, hey, I'm going to take the entire thing and stick it in Forex and make 48% a year on the entire thing. Well, that's great until it stops happening. Right? Losses can happen. And so what we're telling you is there's a sequence to this. It's great. It's an awesome investment, but it doesn't replace the basics. Right? Kind of like with the steroids thing. I'm still going to train. I'm still going to eat right. I'm still going to exercise. And if I decide I'm going to take drugs to compete, so be it. But I'm not going to stop doing all the other things that got me there in the first place. Right? Nano, do they do steroids in the MMA? They're not supposed to, right?
Yeah, I think so. I mean, there's talks, people saying that they do it all the time. So, but
yeah,
I'm not entirely.
But they're still going to go to the gym and train.
Say that again.
They're still going to go to the gym and train.
Oh,
like
100%.
They can't just believe it, stick a needle in their arm and be like, I'm going to go beat Conor McGregor.
Yeah, no, you better believe it.
So, guys, I want to give you a little bit of backstory. So as I mentioned, JP Morgan, and if you don't know JP Morgan, the bank, obviously we all know the bank, but the banker, JP Morgan, literally like changed the banking industry. And he's also probably not a very great guy. He was very involved in the creation of central bank, but he was very smart. He was very good with money, right? And so JP Morgan actually popularized Forex in the 1800s, right? He was literally doing this with newspapers and telegram, right? And he'd look at the currencies and he'd send in his trade orders and he'd do it that way. And he did it as a hobby, but he got so good at it that it actually became something that he integrated with the bank as a profit center, meaning along with deposits and financial products and loans, Forex became a primary profit center. Okay. So he made Forex something that was popularized with banking. Now, again, 1800s is when it started. If we look at this today, foreign currency trading is a 2.4 trillion or quadrillion, sorry, not trillion, 2.4 quadrillion market. And JP Morgan Chase owns 10.78% of that. Right. So this is, again, he started with this as a hobby and it grew to this. And the reason I say this is like, you look at, okay, like Nano said, there's people that'll look at, okay, well, there's many different ways to build wealth and, all these different ideas and opportunities. Yeah. But did they do this? Because if we're trying to build financial freedom, I want to figure out how do I do this with a market this big? Okay. Because I'll tell you where Forex fits in when you are on phase 4, right? And you are trying to become accredited. Accredited means you have $1 million net worth outside the value of your home. Your house does not count towards your net worth. Phase 4 is called sophisticated. We'll call this a sophisticated investor, right? So at this point, I've got passive income. I'm saving 40%. I've done probably half a dozen, real estate deals, and I've done private lending, and I'm solvent, and I'm all these prior things, right? All the way down the line. Okay. And so at phase 4, I'm trying to take my net worth and I'm trying to multiply it to get accredited sooner. And that's where Forex comes in. I'm building my net worth. I'm now skyrocketing up to phase 6 because I've got the foundation to launch off of. Right. So I want to bring this up just to show you the magnitude and also the longevity of this kind of market, and to show you who's in this. Right. So the key here is 3 words: professionally managed Forex. Right. So we've been making fun of the Instagram bros and the bots and the buddy that does it and do it yourself. So what should you actually be looking for? So first is a fund that has done their filings with the SEC. Nano, can you kind of just explain to people why that's important?
Yeah, for one, if a person is not doing that, that means like they're not abiding by any kind of regulations, right? You mentioned it recently this week. There was the $10 billion one?
It was a crypto fund, a $10 billion crypto fund
that was not even filed, right? On under this.
I think they filed. What happened was they went broke and then the owners disappeared. So when it came time to like collect assets, no one was to be found. But there was a smaller fund locally that did the same thing and wasn't registered.
Right. So for one, it is illegal, right? So so that's for one, for starting. So imagine like, okay, is this thing actually abiding by regulation, right? As much as we don't like central banks, we're still under that umbrella. To a degree or another, we have to follow that rules, because why we're forced to play that game, right? So yeah, we may not like it, right? But that has to be in place. Yeah, they, this may suck, or, maybe a suppressive or whatever. Fine, right? But that is the game that we're playing, and we got to get out of it, right? Become financially free, which means that the funds actually need to be filed in order for me to actually be, okay, good. Is this actually a legitimate type of investment that I can actually put my money in?
Right. And that's exactly it. It's like, do you follow the rules? Would you drive in an Uber if you knew the guy didn't pass his driver's license test? Right. Doesn't matter how good of a driver he is. The first question I'm asking is why didn't you just take the test, bro? Like, it's not that hard. Why would you avoid doing it? Right. So the second point is having a track record. So for me, I don't invest in anything that doesn't show at least 5 years of profit. Right. So with my friend that runs this fund, when he first started becoming profitable, he came to me, he's like, hey, I'm killing it now. I think I can help you guys. And I had to tell him, it was a hard talk, but I was like, hey man, like, I love that. That's awesome. I'm proud of you. I watched you come up, but until you can show me 5 years of profit, I'm not putting money in this. Right. And so he actually did that. And so I was able to see, okay, good. You actually did that. I'm willing to invest now. The other part is they do not charge management fees, and they're only paid on performance. Right. So we're trying to get out of the realm of the only guarantee is the fee. Right? Like, that's some Wall Street stuff. You don't want that. You want, okay, if you lose my money, you lose your money too. If you make money on my money, I'm fine that you make money as well and profit, but there's not going to be, this counterintuitive model of you're paid for just managing it, whether you made money from me or lost money from me. Like, I don't want you to lose all my cash and then charge me a 2% fee.
That's the real scam.
That's the real scam for sure. Okay. And then I also look at Forex needs to be the only thing they do. I'm not going to invest with a Forex fund that they also dabble in real estate and they do a little bit of crypto and they do some flips and, no, their thing is Forex. And the reason why is this is not something you can take a break from. Like Neno mentioned with the guy that runs this fund, like, he's waking up at 4 a.m. and that's all he does for the rest of the day until the markets close. Right. I don't want him doing other things. That's my money he's trading. Like, I don't want him like, oh, I do this and then I take a 2-hour break and I flip houses or I speculate on Dogecoin, right? Like, no, I want the crypto guy just doing crypto, right? Because then he's focused. There's less distractions and things that can go wrong. Okay, here's one that is important for me. This might seem counterintuitive. I want to see that they've actually lost a significant amount of money before, right? And then made it back. Somebody that's only ever made positive gains, they've never experienced losses before, right? Like the perfect example, Nano, we saw this with the Bitcoin people. Like, they never experienced a loss. It was up for a period of 2 or 3 years. Everyone's all high and mighty and they're financial experts, and then they get the crap knocked out of them. So I want to see that the loss happened and then they made it back. Go ahead, Nano.
No, so, and it's a problem, right? Because now, so what do you do now, right? Do you actually have the skills to make the money back up? Or are you going to actually rely on more people buying? Right now, I'm into hoping, right? Okay, more people need to actually get in order for me to actually make my money back, versus me actually having a skill that, okay, good, now I do have a skill on this. Let me go to work, right? Because if I lost my money in crypto, I actually have to rely on more people buying it in order for the price to go up, which is like, to a degree, like I'm at the effects of this.
Good. Now, the other one here is a transparent reporting system, right? So I'm not a Forex trader. I don't want to look at a spreadsheet with a bunch of trades, like where it's like, oh, I have to figure out if I made money. No, I just want to see I made money, right? And so for me, it's important to have a simplified and transparent reporting system in place, because that's where people will get you. It's like, well, here's a bunch of data. You don't know which one to pay attention to. And so you don't know how to make heads or tails of the information. And that way they don't have to tell you you lost, because they be, oh, here's your trading summary. And then you've got to figure out what happened. Okay, I'm not doing that, right? And then 7, easy withdrawal system, right? I want to be able to take my money out right away. I don't want to have, waiting periods and strange things that happen when I go to take money out of it. For me, that's a red flag, right? The Forex market is very liquid. My money should be liquid too. So if it's like I go to take money, it's like, oh yeah, it's going to be a month. To me, that means they don't have it, right? So I want to see, okay, tomorrow I could request it and they're going to wire it. and that's it, right? So those are the main things I look at. There is more. Nano, do you have anything else to add on this page?
No, it's just like one of the definitions, right? That you mentioned in the beginning of the call was the speculation, right? Understand that this can help the individual, but I also understand that by definition, speculation, I can make money, but I also can lose it, right? Just have that in mind. And as you did mention, right, that this is a small percentage of the overall pie chart.
Yeah, exactly. So, guys, I had a couple questions come in. Let me just answer those really quick on Facebook. Zoom seems pretty quiet. If you guys have questions on Zoom, drop them in the chat. Okay, we will go live with you. We will answer them. Once again, check your chat. Griffin sent you a message. If you don't have the book, grab the book. You can go to, and Nano can drop this link. If you go to, I believe it's jerryfetta.com/B2F promo. You can get the ebook for $2.99. You can get the hardcover for $9.99. Either way, we'll include a free coaching call. So reach out to Nano, reach out to Griffin for that. So on Facebook, somebody asked, can you introduce me, or how do you guys get me in contact with your Forex buddy? So it is a fund. I want to make sure we're not just calling him a buddy. He is my buddy because I've known him for a long time, but he does run a hedge fund. So this is for sophisticated investors only, which means you've got to be on phase 4 and have done all of the prior phases. And until that happens, we can't introduce you to our fund. So this is going to be, you have a $250,000 net worth. You're saving 40% of your income. You've done enough private lending and on prior deals at the qualified level to actually call yourself truly sophisticated, right? Like when I think sophisticated, I think of a guy with a bow tie drinking tea with his pinky out with a monocle on. And if that's not you with investing, you're not yet sophisticated, even if you've got the Forex. Mark says the chat is disabled on Zoom. I don't see that the chat is disabled. Let me check this out. Yeah, I can see the chat happening. Nano, you see the chat working in Zoom?
Only for the hosts and panelists. I've messaged a few people here on Zoom. I don't know if they have the ability to message back, because usually they're very responsive and there's no communication going on today.
Good. Let's check out our Zoom chat real quick just to make sure that there's no issues with this. I did see at the very beginning, there were some messages that went out. It looks like it might just be us though.
Yeah. So.
All right. So Nano will check that out and see if we can get the Zoom chat to work.
Here, yeah. Jessica Pintermute mentioned that just the Q&A, it's working. And there's a few people that saying that is the chat. It is the same.
Okay, but the Q&A works. So sorry about that. I don't know what's going on with that, guys. So use the Q&A feature. I don't know the difference between Q&A and chat. It seems like they both do the same thing. Use the Q&A feature. If you guys have questions, use the Q&A feature, and Nano and I will field those there.
There is a question from John Hall there, Jerry.
Average monthly, weekly returns. So that's a good question. So obviously no returns are guaranteed. This is completely speculative. It's based on trading. For me, I average about 4% per month. That's about what I get with my Forex investing. So again, that's not a guarantee. That's not a promise. That's not even an offer to invest. Really, it's just, what I've experienced. So, make sure that you look at, not only just the returns, but, all the other things we've talked about today as well. So who is this for? We've talked about this a little bit already. So this is for accredited investors. Okay. And this is also for sophisticated investors. What's the difference here? So when you are an accredited investor, you're going to get a higher return, right? So I talked about, I get, for me, I experience about 4% a month on average, right? If I'm sophisticated, I'm probably going to see about half of that, right? So I might see closer to like 2% a month. Right? Still nothing to turn my nose up at. So if I'm making 22% or 24%, that's still great. That's awesome. If I'm making 48, that's even better. Right? So that's kind of what to expect. Now, again, this is something that I want to actually truly get into at the right time. So I'm not just chasing returns and high numbers. Okay, good. We have a couple of new things that came in on the Q&A. What books do you recommend to read on Forex? So I don't have books that I read on Forex. That's more for me, reading articles. So a good place to start is, Nano can actually send it to you. We have a list of Investopedia articles and just different resources on Forex that can get you kind of grounded in what it is, how it works. There probably are some books out there. For me, it's one of those things where I don't read books on it. I'm not the trader. I want to make sure I understand the business of the fund, and I have it, that's more profit and losses and balance sheets and trading history than actual books. But there probably are some out there that you could find. But Nano, if you could connect with Martin maybe on that email and just send him a couple of those links from Investopedia on Forex.
You got it.
Jimmy asks, when you are saving 40%, do you not invest in Forex until the whole life loan or gold loan is paid off? Like, how does that flow? How does that flow of 40% of your income work with that? Okay, good. So that's a great question. So Forex is something that you're going to invest in. You can borrow against it, right? But let me actually scroll pages up. It's going to be a little easier with some extra space. So you can buy gold and borrow against it and put it in Forex and pay yourself back. The thing to look at with Forex is it is a capital gain. Right? So it's not yielding income per se. You're buying one thing and selling it at a higher price, right? So with this, there's going to be capital gains tax, right? So you're going to have capital gains tax. Some of these are going to be short term because the trade is going to be a short term trade. So these are taxed as income. And then you also have what's called fund turnover, right? So let's say I buy a share in a Forex fund and I won't actually be paying taxes on the gain until I sell that share at a profit. However, if that share owned and sold and bought and sold a bunch of different currencies, there's underlying taxes happening on every single one of those little mini trades. So even though I didn't sell the share, there are still our taxes due because of the turnover, right? So with that being said, very high return. It can also be a very high tax burden. So with Forex, typically, and this is on the next page, but I'll show you guys this now. Typically, you want to use tax sheltered accounts. Okay, so this is a great thing for your self-directed IRA, your self-directed 401k, right? Your self-directed HSA. These are places you would buy Forex in. You could also use tax reduction trusts, right? And the reason being is all of this gets sheltered, right? I don't have to worry about taxes. So if I have $1 million in Forex, and every single day trades are happening, that's turnover on $1 million worth of trades. Like my tax bill at the end of the year could be gigantic. Even though I didn't sell or withdraw the money, just the fact that those trades were happening underneath. So by putting it in a self-directed IRA, 401k, HSA, tax reduction trust, one of the equivalent where I'm tax sheltering, it's preventing the taxes from happening, right? So in that scenario with these particular types of vehicles and financial tools, we're not going to be doing the borrowing and loaning. Right? Like we can't put life insurance in an IRA, borrow against it and do Forex. That's not a thing. We just have to put the money in Forex, right? So kind of pick your poison. Now, with this being said, like you will make a higher gross return. You're not going to make 44% borrowing against life insurance and doing a private lending deal, right? So there's a difference there. Now you do have more risk. Again, I have a very small part of my pie in Forex, but that's kind of the strategy there, just to answer Jimmy's question on how does that fit into things and how does that work with, borrowing and being your own bank.
There was a question that came in here, Jerry, from Patrick J. I know it's about Forex, but what does it take to start a sacred account?
Oh, awesome question. So Patrick, connect with Nano on this. Nano can answer that question. So to start a sacred account, that is a high early cash value life insurance policy. And so that's going to be a process of, first understanding it. There's some education we're going to want you to have. You'll probably want to have that education as well. And then going through the process of, okay, well, how much am I putting into it? How does it work? How do I design it? And so that's going to be a step-by-step process Nano can help you with. So Nano, could you connect with Patrick on that?
Yeah, I already messaged him.
Awesome. Very good. Cool. So coming into the finish line here, guys. So these are the steps. And actually a few more questions on Facebook really quick. Jeff says, I work with accredited investors. Want to give them a referral. Yeah. So even with accredited investors, we're going to want them to go through our system first, right? So, we want to make sure you have the financial education. Just because someone has $1 million net worth doesn't mean they're ready to jump into a deal. There's a lot of undercuts that we do to make sure someone actually is financially literate, they're solvent, they're properly protected. they are qualified, they're sophisticated, all by definition, not just by net worth. Neno, do you want to say something on that point?
No, with that, right? It's just because I have $1 million does not equate to me being financially literate, right? This is one of the things that we encounter from time to time, right? Oh, like I have the money. Well, that is one of the requirements. That is not the only requirement, right? It's actually a list of things which you just listed out, right? So having money itself does not equate. Okay, good. Let me put money in a deal, right? Imagine if I have never done a deal before. And now, like, for whatever reason, right? Like, I feel like I need to pull the money out, right? And it's like, it doesn't work like that, right? So I got to understand how the game is played in order to play ball, right? Because if you cannot see that the person knows, okay, has this person has shown a consistent behavior that actually going to be doing the right things whenever the time does come to play ball. Because if they don't, right, in the smaller deals, the bigger deals, they're not going to be allowed to play. That's the bottom line.
Exactly. So how do we get started with something like this? The first thing is to learn about it, right? So if you're on this webinar right now and you're like, this is interesting, I'd like to learn more about it. What I'd like to do is, number one, grab the book for sure, right? So if you don't have Blueprint to Financial Freedom, grab the book. The second thing is we do have a list of handpicked articles and resources that I found on Forex that are a good entry point, right? So if you email Griffin at wealthdynamics.com, and Griffin's in the chat here. Griffin, if you could drop your email Griffin and just tell him, hey, I was on the webinar. I want to learn more about Forex. He can get you connected with that info. Him and Nano can send you those links out. And that way you're able to start learning. You can start getting, your legs beneath you. And that way, when you get there, it's not a brand new concept, right? It's not something where you feel uncertain. Okay. So basically that's your first step is education, right? Second step is actually get to phase 4 on the Blueprint to Financial Freedom. Now, you can't get to phase 4 on the Blueprint to Financial Freedom if you don't know what the Blueprint to Financial Freedom is, right? We can't do things we don't know about. So again, get the book, reach out to Griffin, reach out to Nano. Don't wait on this. You can get an excellent deal, $299 for the ebook, $999 for the hardcover. And you can start learning about, okay, well, what are the rest of the phases, right? Like like we're building a house. Okay, cool. I understand there's windows. I need to learn about the windows, but what about all the other things I've got to put up? I can't just focus on the windows. Right? There's roofs, there's foundations, there's trusses, there's walls, there's drywall, right? So this is going to be, getting to phase 4. Okay. Part of this is having done many other passive income deals first. Okay. Again, Forex is not passive income, it's capital gains. So the equation is passive income greater than savings, expenses, and taxes, not capital gains greater than savings, expenses, and taxes. Forex is a supplement. It helps you grow your net worth so you can become accredited faster. That's the purpose that it serves here. Okay. 4, do this in tax sheltered accounts. We just talked about this, tax sheltered accounts, tax avoidance trusts in order to reduce your turnover and lower your tax burden. And then number 5, do this at a gradient, right? You definitely can lose all of your money if you do this incorrectly, right? And the last thing we want is for somebody to have to go all the way back to phase 0 because they got hasty on phase 4. Right. So use caution, be educated, follow the prior 4 steps here before on step 5. And then number 6, integrate this with your Blueprint to Freedom steps. I kind of already hit this. This is a supplement. So it's not, this is the plan is put everything in Forex, right? There's timing, there's steps, there's a process here, right? So this is what we would do as far as an action plan. And it starts with getting the book, right? So again, if you don't have this yet, grab the book, Blueprint to Financial Freedom, reach out to Griffin, reach out to Nano, and then request that information on Forex. You can email Griffin at wealthdynamics.com. That's Griffin at wealthdynamics.com. Nano, I'm going to check for questions. Do you have anything else you want to add on this?
No, I did post Griffin's email in my email here on Zoom, but people that I guess they're unable to respond back. I'm going to go ahead and post it on Facebook as well. So you can reach out to me or Griffin if you have any questions.
Awesome. And then Nano, it looks like Patrick sent his info for you to get in contact with them. Good. That's all the questions I have. So guys, again, this is an awesome investment. It's very fun. I love logging in every month and looking at my statement and seeing, 3s and 4s and 5% on a month every month. That's awesome, but it does take a lot of education. Like I said, for me, just to give you reality, I learned about it. My buddy, like I said, he just got good 5 years ago. So on the first year, he approached me and I said, no, I had to have the discipline to be like, okay, cool. This guy could probably do, a lot of trading and make me a lot of money. I'm going to say no right now. And I'm going to learn and I'm going to wait till I see the results that I need to see, right? You should have the same approach, right? So this doesn't interrupt your progress. this should be something that definitely inspires you, right? If you're close to phase 4, or even if you're on phase 0 and you're like, I'm getting out of debt, you should be excited to be able to do this, right? It should be like the one of the rewards of like, okay, I can't wait to get there and do this kind of investing, right? So guys, that's all I have for tonight. Nano, do you have anything you want to close out on?
Get the books, get on the call, because if the plan you've been working on is been working for you, fantastic. But if you need help, why not? Let's get on a call. You and I, most likely, or Griffin is going to get on a call with you. Just, hey, let's have a conversation. One thing I can tell you is that if I cannot help you, I'm going to be very upfront, because I don't want to waste your time, nor mine, right? So let's be frank, because I am dealing with a lot of people. But we'll get on a call. But if I can actually help you, I'm going to show it to you. So let's get on a call.
Awesome, guys. And then we do have Money Monday coming up this Monday, 4 p.m. Eastern time with Nano Aquino. So make sure that if you're watching, you can attend that, mark it on your calendar. We'll send out some information. Nano's going over the book, The Legend of the Monk and the Merchant, one of my favorite books of all time. So definitely be on. That's what time, Nano?
4 p.m. Eastern time.
4 p.m. Eastern time. Good. So guys, again, get the book, reach out to Griffin, email us, get set up with a call, whatever it is that you need to do to start making progress, taking your next steps, becoming a client. Otherwise, that's all we have. We'll see you guys next time.
All right. See you guys.